China has agreed to open their markets to the United States separately of this deal.
The latest round of US-China trade talks has officially wrapped up in London. President Trump took to Truth Social, declaring, "The deal is done." But is it really? Behind the headlines, the outcome is more of a ceasefire than a breakthrough, and many key economic questions remain. In this video, let's unpack exactly what both sides agreed to, what's missing, and what it means for businesses and markets.
Both countries would go back to the tariff levels that they agreed to back in May, which is a 30% tariff on all things coming from China into the U.S., plus 25% for certain levies, and 10% tariff on all American goods going into China.
Following 2 intense days in London, U.S. and Chinese negotiators reached a framework to implement the Geneva Agreement. Here's what was agreed. China will resume exports of rare earth minerals and industrial magnets to the U.S. Critical inputs for industries from automobiles and fighter jets to aerospace and advanced tech. In return, the U.S. will relax some recent export controls imposed since Geneva. The specific products and scope are still unclear. The U.S. will also allow Chinese students to continue studying in American universities, a key priority for Beijing. As for tariffs, the U.S. will maintain a total tariff burden of 55% on Chinese imports, comprising a basic 10% reciprocal tariff, 20% related to fentanyl concerns, and 25% from existing measures. In exchange, China will apply a 10% duty on U.S. imports. While President Trump's post sounded decisive, saying deal is done, the reality on the ground is more nuanced. As reported by CBS News and confirmed by senior White House officials, the framework still awaits formal sign-off from both President Trump and President Xi Jinping. No official word has come from Beijing confirming Xi's approval. Meanwhile, U.S. officials themselves acknowledge that Trump is still reviewing the terms. Analysts, including Bill Reinsch of the Center for Strategic and International Studies, caution that this round amounts to a temporary ceasefire. In his words, both sides are essentially returning to what they promised in Geneva a month ago. In other words, this round of talks focused on pushing both sides to finally deliver on commitments made last month, many of which had stalled or remained unclear since the Geneva deal. Markets reflected this skepticism. Following the talks, the Chinese yuan strengthened slightly while U.S. equity futures dipped, a sign that investors see the deal as stabilizing but not transformative.
China is going to send more rare earths to the US, and in exchange, the US is going to roll back some of the export controls that it had introduced in retaliation since the Geneva Agreement.
Despite this progress, major economic issues remain unresolved. First, rare earths. While China agreed to resume exports, experts like Kurt Tong highlight that the terms are still vague. We don't yet know which rare earths, how much, or on what timeline. Given China's near monopoly in this area, it retains significant leverage. Second, export controls. The U.S. is lifting some controls, but which products are included is critical. As Bill Reinsch warned, it's a loss of leverage if high-tech items are included. Currently, details are sparse. Third, broader trade goals. Core U.S. demands, from ending industrial subsidies to curbing intellectual property theft, have seen little to no progress this round. Finally, tariffs. The 55% U.S. tariff burden remains substantial, posing ongoing costs for U.S. importers and consumers. Small business groups and Wall Street alike are questioning the sustainability of such high trade barriers. Chinese electric vehicles, EVs, a high-profile concern, also remain subject to tariffs that effectively double their price, with no new concessions granted in this area. In short, the London talks reopened dialogue but have not resolved core tensions. The Geneva framework is back in motion, but with limited new progress. As Reinsch put it,
but I don't see a big plan here, and I don't see us accomplishing major changes in their economy.
Looking ahead, further talks are expected, with speculation that Trump may visit China this fall. But structural reforms remain unlikely in the near term. For now, this is a ceasefire, not a resolution.
As a matter of fact, now both U.S. and China realize how indispensable we are. We are really cannot separate, cannot decouple. and the world economy really need us, and also the confidence, stock market, oil prices, you name it, all hinge on this China-U.S. Trade talks.
President Trump has declared, "Our deal with China is done, pending final approval from President Xi and me." The latest framework, reached in London, promises that China will supply rare earths to the U.S., while the U.S. will ease visa restrictions for Chinese students. But here in Washington, skepticism runs deep. Many officials, and Trump himself, point out that China hasn't always honored its past trade commitments, including the Phase 1 deal. So, will Beijing really deliver this time? And when China claims it does not weaponize rare earths, is that true? Let's take a closer look. Trump's declaration of deal done sparked headlines, but also serious doubts. The new framework is only an agreement in principle. There's no binding enforcement, no dispute mechanism, and history offers reasons for caution. After the Geneva deal just weeks ago, China temporarily tightened rare earth exports, despite agreeing to ease restrictions. China's own Ministry of Commerce reported that U.S. imports of rare earths dropped 5.7% in May. Meanwhile, a recent AmCham survey found that 75% of major U.S. firms expect to run out of rare earth supplies within 3 months if restrictions persist. Policymakers here also note that China did not fully honor its Phase 1 trade deal, a warning signal for any new agreement. But the situation isn't one-sided. Some of today's volatility stems from the U.S. itself.
Since the Geneva talks, we see some U.S. Lifted, new sanctions. No, actually added new sanctions, but also new measures on chips and on Huawei, on many other parts of the supply.
After Geneva, the Trump administration expanded export controls on chip design tools and warned global partners against using Huawei chips. It also initially kept tight visa restrictions, only loosening them under the London framework. China's response, slowing rare earth exports, was partly a reaction to this policy instability. This tit-for-tat cycle helps explain why trust is now so fragile. Yet publicly, Beijing maintains a different narrative, insisting that its export controls are guided by market principles, not political retaliation.
That is why China always repeated they say such a regulation or export control does not target at any single country but for the whole market rule.
So what is China's message? As Yang Xiu, senior fellow at the China Institutes of International Studies, explained that China's rare earth export controls are guided by market rules and dual-use management, not designed to target the U.S. Yang said that export controls are driven by national security concerns and the dual-use nature of rare earths, not by targeting the U.S. Yet the facts tell a more complicated story. After Geneva, rare earth shipments to the U.S. declined, and Chinese analysts admit that U.S. actions contributed. Wang Huiyao, president of the Center for China and Globalization, warned that trust was damaged because the U.S. kept adding new measures. If that continues, he said, confidence will erode further. Brian Wong of the University of Hong Kong noted that China remains highly cautious about trusting the Trump administration, given its track record on past trade deals. In short, when Beijing says it won't weaponize rare earths, many in Washington hear, unless provoked. That leaves little room for complacency.
How can we make sure that after this so-called framework, the United States is not going to do the same thing?
So where does this leave us? For now, the London framework is a fragile ceasefire. There's no binding enforcement. The WTO's appellate body remains defunct. China signals that it will comply, if the U.S. refrains from new provocations. But Beijing retains full discretion over rare earth exports, and experts warn that these materials remain a potent strategic tool. Meanwhile, Trump's own unpredictable policy shifts add further uncertainty. With new tariffs and export controls still on the table, the path ahead is anything but stable. And with rare earths still a key source of friction, the stability of this framework remains uncertain. Trump says, deal done. China says it won't weaponize rare earths. But given history and recent actions, caution is warranted. For now, the U.S.-China trade relationship remains balanced on a knife edge. And unless both sides build genuine trust, this latest deal may prove no more durable than the last. We'll be watching.
We are doing well with China. China's not easy, just like your home country is not easy there. I think we're doing very well. They're over there.
The next round of US-China trade talks is underway this week in London. And as President Trump bluntly put it, China is not easy. Beneath the surface, this is a delicate balancing act. The Trump administration wants to reshape US manufacturing, but also needs to avoid disrupting supply chains or triggering inflation. With China holding key leverage points, this round of talks could be a real test. Let's break it down. Let's start with the broader context. President Trump has publicly emphasized the goal of opening up China. But he also acknowledged the challenge, saying, "China is not easy. We're doing very well, but it's early." At the heart of this push is Trump's promise to reshape US manufacturing. As Michael O'Hanlon from Brookings points out, this is about far more than tariffs. It's about how the world's two largest economies will compete in technology, supply chains, and consumer markets. But here's the catch. The US economy is deeply intertwined with China's. Cutting that link too quickly could trigger a recession, something Trump clearly wants to avoid, especially with the stock market in focus. According to O'Hanlon, the US still relies heavily on Chinese rare earth minerals, critical for tech manufacturing, and on consumer goods that help keep inflation low. In short, Trump needs a deal that looks tough but doesn't disrupt the economy.
The fact that we have become so dependent on elements like critical minerals and the permanent magnets we need for our commercial sector, our defense sector, so much so that...
And that's where the talks in London come in. One of the key issues on the table is China's restriction on rare earth exports, vital for everything from smartphones to electric vehicles. Kevin Hassett, head of the National Economic Council, told Face the Nation that the US wants rare earths and magnets to flow just as they did before the beginning of April. But China knows this is a point of leverage. As Michael Pillsbury explains, Chinese officials are not afraid of tariffs below 70% and have been playing the rare earth card strategically. Meanwhile, US companies are feeling the squeeze. CBS News reported that many small businesses are holding back on issuing guidance for the coming quarter due to this uncertainty. Without clarity, investment and hiring could stall. In response, the US is using export controls as a key lever. Pillsbury highlights the Commerce Department's Bureau of Industry and Security, which recently blocked US firms from supplying advanced chip design software to China. This is no small move. China needs this software to advance its AI and semiconductor industries. But here lies the complexity. While the US holds cards in high-tech exports, overplaying this hand could provoke further retaliation or worsen supply chain disruptions. Beyond tech, the US also depends on China for many pharmaceutical ingredients, another hidden dependency that complicates any strategy of economic decoupling.
Competition, and both sides have big asks of each other and big needs on each other. We need China's rare earth.
Looking forward, there are no easy answers. The 90-day tariff truce, set to expire in early July, adds urgency to these talks. CBS News notes that while an extension is possible, concrete details remain scarce. Domestically, Trump faces pressure from US businesses eager for clarity. But reshaping manufacturing, a core Trump goal, will take years, not weeks. As Pillsbury reminds us, China's rare earth dominance was built over 3 decades. The US is only beginning to rebuild these capabilities. So as the London talks continue, remember, this is a high-stakes economic chess match. Trump may want to open up China, but doing so without undermining US economic stability will require careful moves and likely more time. We'll be watching, and we'll keep you updated.